Time now to welcome in our closers panel. We've got Kevin Green, Senior Markets Correspondent, and Nicole Petallides, host of Trading 360 and the Watch List on the Schwab Network. Thank you both for joining me. Nicole, talk to us first about your thoughts on how this session went. It's a quite different story from when we started, when the open happened today.
Look, good afternoon to you both. I'm happy to see you both. I mean, you've given back the gains that we saw earlier today, but you still had names like Okta and CrowdStrike, and you've had an incredible week. I mean, I think the fact that we're pairing the losses that we've seen for the month of August really ends this month on a bullish tone rather than a bearish one. August seasonally is not a great month, neither is September, and this was really shaping up to be obviously the worst month of the year. But things have improved some. And while we did finish with the down arrows, it probably could have been a lot worse. Though I do see healthcare and utilities with down more than 1% each. That's not particularly good news there.
No, and it looks like the consumer sector is up. Consumer discretionary is up on the day. But Kevin, let's take a look at what your thoughts are heading into these earnings reports that we have today. I know you were tracking quite a few of the names that are reporting after market.
Yeah, we have some interesting ones here. We have Dell, and I think that's going to be probably the most interesting one of all because they have actually continued to move to the upside when it comes to price. But when you're looking at their earnings results over the last several quarters, it's been a little bit weak, especially on the adjusted earnings per share side of the business. Now we know that they have a huge exposure when it comes to PCs, and the biggest PC side of the business is going to be commercial. So let's see if we are going to see a little bit of a bottoming when it comes to demand there, and we start seeing a lift off. But the stock overall has been continuing to move to the upside. That multiple is expanding. Now you need to have the earnings, adjusted earnings per share, really to backfill that number in order to make it a little bit more attractive. But if it is able to beat and provide some really good guidance, we may be able to see a little bit of a breakout and potentially test all-time highs here.
Now, I think Dell is interesting, obviously, especially with what happened with HP and then that announcement that the company made earlier with one of the other companies in the sector. But Lululemon is going to be watched incredibly closely. Nicole, talk to us just about the fact that Lulu has been able to defy the odds.
Yeah, I think Lulu has been one because in the last quarter, I mean, you had the last two reports when you looked at Lululemon and you watched the chart, in the earnings day, you saw the gap up on that stock chart, not once but twice in the last two times. I mean, so they've certainly seen the jump. They've managed to sort of buck the trend. Year to date, it's a winner, and it's one that also has been expanding abroad and has its own little footprint for somewhat of a luxury and, of course, athleisure brand. So it does have that brand recognition. And while Nike was downgraded, at least by one analyst, to a sell rating, we've seen direct-to-consumer and e-commerce doing very well for Lululemon.
That's true because Lululemon has 100% direct-to-consumer. Nike tried to do that, didn't quite work out as well with them. They took themselves out of a lot of the department stores and then put themselves back in. So I guess it just shows the strength of the brand itself. Kevin, did you have any thoughts on Lululemon as we head into it, even about the charts of Lululemon? That's what's been happening this year with the stock.
Yeah, from a chart standpoint, it has been trading in a pretty consistent range over the last couple of months. So you want to be able to see a breakout to the upside here if you are our bull. I'm going to be more curious and interested into their inventory management strategy. We actually did see a couple of quarters ago, they continue to ramp up their inventory, and the market was a little bit nervous about that. And last quarter, they actually proved that they were able to get that inventory out without having to really mark down any type of prices, which would eat into margins. You want to continue to see that having a consistent base there. And if we are able to see that, we might see the market really provide a premium when it comes to the stock price.
And as a matter of fact, Lululemon is out now with its earnings report. We're looking at second quarter revenue of $2.21 billion. Second quarter earnings per share at $2.68 a share. That is above the expectation of $2.53 a share. And revenue looks like it also came in above expectations. The expectation for revenue was for $2.1 $1.17 billion. Just looking at this come through, looking at the momentum that this stock has had. Nicole, talk to us about what you're seeing with Lululemon as the numbers come out.
As we're getting Lululemon numbers, and I'd like to say that they're beating. I'm also looking at some of these gross margin, operating margin numbers. You see the volatility in the after hours there as it's getting jostled around. Gross margin 58.8%, operating margin 21.7%. So we're waiting on some more details as far as what they see. I mean, going forward, I see that earnings per share coming in, same store sales were up 7%. I like to see something like that, but it looks like it is taking somewhat of a turn to the negative side. So they've had to manage inventory levels. Storage costs are costly. They're not really one to do a lot of promotions, and that's something, too, that I'll be watching for in the big picture. I mean, as we get these fiscal results, we are seeing the stock being jostled around. But the last 2 quarters, as I noted, you did see the company jump higher. They said that the results, ongoing strength of the business amid a dynamic operating environment. They're proud of what they've been seeing. I'm paraphrasing, but new products and experiences for their guests. That's the big picture. Also, I was also curious whether or not they do anything with the other side of the business, rowing machine or things like that. We've talked about other ways for Lulu to have revenue streams. They had the mirror for a while, right?
They did have the mirror for a while, and I had no clue that Lulu actually manufactured that until when we talked about it a few months ago. But gross profit, you talked about how it increased a little bit. You talked about gross margins. Gross profit increased 23% to $1.3 billion. Gross margin, you said that it was up 58.8%, that it was at 58.8%. That's an increase of 230 basis points. Kevin, talk to us about what you're seeing as well with this report. Maybe you have a little bit more color on inventories.
Yeah, I would say it's a mixed report here. So top bottom line beat. I'm not sure about the guidance here. I'm kind of waiting on those numbers when it comes to what the street was actually expecting here, but it does appear that their inventories did actually increase around 14% on a year-over-year basis. Now, once again, this is one of those areas that it's going to provide a little bit of a mixed reaction for the stockholders, because that's a pretty healthy clip on a year-over-year basis, and we continue to see this incremental change in inventory to the upside on a quarter-over-quarter basis. So you want to be able to see them and not only just build up their inventory, but having that inventory move out. Now, they did actually improve their margins for the most part here. We did see a little bit of an increase when it came to some of their SG&A expenses. But overall, I think this is a mixed report. I just think right now it's really hard for a company, no matter what type of brand that you have, to continue to build up inventory with the outlook of the consumer being so murky. And even if we talk about Apple, which has another really good brand, you want to be able to see them build up their inventory as well. But if you're seeing softening in like China, then you also have a little bit more carrying costs and you have to mark down prices here. But I think it's a mixed report. Let's see how the conference call is going to be able to be managed here. But when you're looking at the store openings, when you're looking at top line, bottom line growth, I think those are all within the market's expectations. Inventory, once again, just a little bit sticky.
All stellar points, Kevin. Let's take a look at Mongodb. Shares are popping right now after market. Looks like earnings, revenue, sailed past estimates. Earnings per share at 93 cents. They beat a 46-cent estimate. Sales at $423.8 million, beating the $393.35 million estimate. Nicole, talk to us about what else you're seeing here.
Yeah, so as we're taking a look at Mongodb, I'm pulling that up right now, and I did see that gap higher in the month of June, and the stock moved to those new highs of 439. Those were 52-week highs, and in these after hours, the levels that you're seeing would then be new 52-week highs once again, with an adjusted earnings beat there of 93 cents versus the estimates of 45 cents. With Mongodb, which has been a real stellar performer, it's up about 95% already this year. In the last round, they had 2,300 2,600 more than expected customers added, which brought them to 43,100. That also was higher. They've had the deals with Alibaba. They've been filtered through from Oracle. That was good. But the Baba deal brought new growth. And so that really, I think there were a lot of expectations with that and the higher growth after that in consumption. And this started all the way back in 2019. But you can see here that they beat on the top and bottom line. And this stock here, if we're moving to these after hours numbers, look like it'll be a new 52-week high for this name tomorrow morning if it can hold these numbers right now.
Absolutely. Good to note that. The company also noting that they're in the early stages of AI, and they're talking about the AI specific applications. They want to make their competitive advantage even stronger in the world of AI. Kevin, did you expect anything less from this company than to talk about AI?
Not at all, but it does appear that this is the company that people are actually flocking to. Executives as well as just hobby programmers and things of that nature are flocking to this business in order to build out their platforms, and we're seeing it in this result here. I mean, when you're talking about beating the earnings expectation by almost 100% for the most part, I mean that's remarkable to say the least. They did see their revenue up about 40% on a year-over-year growth, year-over-year basis. They also just continue to outperform, and some of the acquisitions and some of their partnerships, they're really starting to streamline those processes here, and we're starting to see it flow through not only on the top line but the bottom line. But I believe the top line growth is really the key for this company, and as they get into this AI space, it's a perfect hybrid between storage, having the platform accessibility for programmers and developers in itself, easy to implement. I mean, they're hitting all the right marks. They're not just specialized in one area of this business, and it's showing right now. The market is showing a premium for this name, and maybe they're going to be the one of the first ones in this kind of cloud space to really break out from some of the others that we've been talking about over the last couple of days.
Good to note that as well. And as we talk about top and bottom line beat, it looks like Dell etched in one with earnings per share coming in over the estimate, $1.74 over that $1.14 estimate for the company, and sales made $22.93 billion, beating the $20.85 billion estimate for Dell. Nicole, I know you have a lot more to say about this as the earnings view comes out. What else are you watching?
Look, a better than expected report overall. Dell is the one that's been the chart that has been the least choppy this year. It's gone from $32 up to $58. Look, we're seeing it higher in the after hours, so these could be new 52-week highs here, as well as we see this double beat on the top and bottom line. I mean, the innovation that people have really been talking about pertaining to Dell and looking at their new cloud platforms with Microsoft, Red Hat, VMware, artificial intelligence has been another area of innovation, PCs as a service, and cybersecurity. So all of these going into Dell. It's not the Dell that we once knew. I'm actually happy to see one of the older names that we once recognized coming back here and doing well in the after hours. But to see a double beat here, and I just wanted to check the price at this moment as we speak. But we are seeing Dell right now up about 8.5% to $61, which obviously would bring it to a new 52-week high, which would surpass that 58 and change.
We'll see if it holds to the open tomorrow morning.
Back a little bit already, yeah.
Right, it has pulled back a little bit. But both of you, thank you so much for coming on and talking these earnings results. Nicole Petallides and Kevin Green.